You're tuned in to the MtG Cable cast, where they cover Magic, the Gathering finance. All right? You don't know about it? You're tuned in right now and get ready to learn some shit. Buckle your seatbelts and light a blunt and get ready for the MtG Cable cast. Starring Reptar and Thirsty, them onion head motherfuckers.
Alrighty, guys, welcome to the newest episode of the Cabal Cast, and we're a little bit late on it, but today we are going to cover one of the most revelatory Hasbro earnings calls we've covered so far, where Hasbro admitted that they just lost $1.06 billion in a quarter, that the OGL debacle was a disaster for them, that they lost way more money than they thought they would, and that the E1 acquisition was a complete mistake on their part. So what we basically did was each of us sat down with the notes from the earnings call, picked out some things that we thought were important, and we're covering them today for you.
Yep. So the E1 loss up top is talked about in really two specific ways. One is this kind of coded message that the WGA and associated strikes basically impacted E1 to such a degree that it was going to be unprofitable throughout the year. They painted in very broad strokes. They talked about losses due, not just due to that, but to certain pieces of media and marketing, never calling out the Honor Among Thieves movie and just kind of skipping past that, which we knew was a break even at best based on the numbers that we threw out during those episodes, and a loss at the worst. And inside a lot of this, there's also some kind of codified messaging around goodwill. And it takes a little while to kind of cut through, and Investopedia has a really good definition of goodwill. And that is, goodwill is an intangible asset commonly associated with the purchase of one company by another. Specifically, goodwill is recorded in a situation in which the purchase price is higher than the net of the fair value of all identifiable, tangible, and intangible assets and liabilities associated in the process of acquisition. The value of a company's brand name, solid customer base, good customer relations, good employee relations, and any other patents or proprietary technology represents some examples of goodwill. Now, this all applies to E1 because this is basically how they identified E1 as being a loss. They didn't call it specifically as being a loss. They said there was a lot of money tied up in the goodwill surrounding E1. When we look at the deal that went down, Hasbro bought E1 for $4 billion. And as you begin to investigate this, the headlines become pretty clear that they basically seem to buy E1 for two brands, Peppa Pig and PJ Masks. And those are basically not quite infant, but a little bit past infant and toddler kind of programming prior to getting into like Bluey, for instance, and watching that. So maybe like, let's say 2 to 5. And I believe, as we know after this acquisition, shares of Hasbro went down. So this trade was valued poorly. It looked like from the beginning, the goodwill on this was negative to begin with. Now, as we dig in and we cut through the earnings call, we see that PJ Masks was about $960 million worth of goodwill. That's $960 million loss. And as this was part of the $4 billion deal, they either knew immediately that this program was going to fail, or they just bought this. They bought E1 for Peppa Pig and are just going to try and ride that little pig into the sunset. Because they've effectively removed the brand from E1. They removed Peppa Pig when they sold E1. They made note of that and then kind of passed it on to, is it Lionsgate?
Yeah.
Yep.
That's who ended up with it.
As I dug in on PJ Masks, I did find that this is basically streamed exclusively. It's been on Netflix for 5 years now. It's on Disney Plus, and streaming numbers are hard to get, but it seems that the popularity on this started to immediately wane after the E1 purchase. So this was immediately a lead balloon for Hasbro. So again, it seems like this is something that they knew was going to happen, and instead of trying to address this or kicking the brand to somebody else, they basically just moved all in on Peppa Pig. And another thing I found while I was doing this, because I was trying to figure out what age range PJ Masks was applicable to, is that not only is PJ Masks on Disney Plus, but Disney Plus just picked up Bluey. So they're basically like stacking this lineup or phasing out old programs by buying kind of like the new hotness. So Disney is extending its catalog, its applications, what it can do with young kids, and Hasbro has basically just abandoned that almost entirely in favor of just one little pig. Bluey, as we talked about a couple weeks ago during the licensing episode, seemed like everything was up for grabs at some point. And Hasbro could have had the opportunity we talked about for toys, for dolls, for maker aspects, etc. And they just kind of did nothing with Bluey. They want to be a brand for children. Take a swing at it. It seems like they didn't. Disney has, which is perfectly fine. But we see Has kind of tried to step into this arena. It failed almost immediately. And now they've had to back out at this incredible loss. Incredible. Cited solely as goodwill.
It's really interesting to me. Like, on the one hand, I'm almost thinking they've just recognized they can't beat the mouse. But there's no way that's the case. It's Hasbro. But it's very interesting to see what has come of this and how it hasn't triggered another Alta Fox conversation.
Correct. And the other thing the reason why this was important to me wasn't just because we can see how bad the E1 purchase was, but because it helps us define the term goodwill, because we see this a lot in this earnings report, and we see goodwill corresponds to the overwhelming majority of loss from Hasbro. They extend the term past the entertainment brands and down into inventory. They never say if it's liquid inventory or illiquid inventory. They just call it goodwill.
Yep. It's really strange. Did you have anything else?
As far as
or can I go?
As far as E1 goes, that's really it. Just the strike and PJ Masks was kind of like the most interesting part of this. So take it away. What you got?
So one of the biggest things about this was, obviously this was the fourth quarter earnings call, which you expect to be incredibly good news when you're a toy retailer, because kids need Christmas toys every year in quarter four. So the highlights, the very first highlight that they highlighted on the press release was a Q4 revenue decline of 23%. With a 7% growth in Wizards of the Coast. But the consumer products, so like literal toys, lost 25% over 2022. And it's not like there was stimmy check money rolling in 2022. The last one was in March of that year. So there was no free money train rolling in for the Christmas prior. It literally, Hasbro just got destroyed in the fourth quarter. Mattel, interestingly enough, did not post a $1.06 billion loss. They posted a $200 million loss. So Mattel was running things a little bit better. And then, of course, the entertainment segment, which lost 49%. But as you touched on, E1, we kind of knew that was going to happen. That was just the bread and butter. That was what was expected with that. Yep. Was we bought this, we experimented, we took a loss, we're moving on. And then one of the really interesting things is that despite growth, there was a loss of 3 to 5% revenue year over year for Wizards of the Coast. And this is where it gets really telling, because it's largely driven by a second half comp in licensed digital gaming, which sounds ridiculous, but licensed digital gaming refers to licensing things out, which we touched on in our licensing episode. And their operating margin moved from 38 to 40%. So they got a little bit more profitable in that. Now, to dive into this a little bit deeper, and this is something that I'm floored that they put the transparency there for, because we've been asking for transparency on a lot of these numbers in our episodes about these earnings calls, wondering where they're going to get to. So the Wizards of the Coast and digital gaming segment saw a revenue increase of 10% because of licensing from Larian Studios for Baldur's Gate 3 and Monopoly Go from Scopely. So they literally finally did the thing. They took this incredible license, Dungeons & Dragons, and they licensed it out. And they made a ton of money with relatively low overhead, because they weren't paying the software devs for this game. Larian Studios said, hey, we want to pay you to use your rule set. If you want to send some people to supervise, fine, we understand that's what's got to happen. That's okay. Now, tabletop, and this is what's really telling because this is something that's almost getting like a script. Tabletop revenue increased 1% behind Magic the Gathering, with a strong performance from Universes Beyond, Lord of the Rings, Tales of Middle-earth. Shortly after this call, Aaron Forsythe was on X, and he said, hey, we're probably going to do 2 sets like that every year now. So this did well enough at getting a 1% revenue increase that they have now decided they are going to do 2 Universes Beyond sets because of how successful this was for the company. Because it was not only successful for Wizards of the Coast, but Wizards of the Coast was the only profitable branch of Hasbro for Q4. So they've decided we're going to double down on this. And then we get into the thing that's really interesting, and that is operating profit declined 2% and operating profit margin of 36.1% due to higher royalty costs associated with Universes Beyond. So now we're, what is this, the 5th call in a row?
Something like that.
Higher royalty costs associated with it. Okay, we've admitted we're losing money, but we've decided that 1% is enough that we're going to double down on this every year. And that Q4 summary had some of the juiciest tidbits of the entire call, in my opinion, because those to me are 3 very, very important areas where they're admitting it either didn't work out as well as they had hoped, or, fuck it, we did well in this and it's the only area in the company that did, so let's milk that cow for all it's worth.
Yep. The one thing I like about the Universes Beyond conversation is the more you read through the revenue report, the more it actually seems like the licensing fees for this is seen like a loss leader for Magic, where like the idea of a loss leader is something in, let's say, a grocery store. You put it on the end cap. It's a sale item. You put it in your flyer, your advertisements, etc., to get people in. You're going to take a loss, at best a break even on it. But while they're there, they will buy other items in the store. That is what a loss leader is, for the most part. And the way they talk about Universes Beyond, it's very much the same here, which is just we will bleed on the licensing fees because while people are here buying Universes Beyond, they will spend money elsewhere buying Magic. And that is information they might be able to collate a little bit here and there, but it is kind of interesting to see that this is kind of where they're putting their eggs right now. Now, the Tolkien estate, and I think it's the BBC, owns the licensing for Doctor Who. Obviously, when it comes to the portraying the humans, that's a different set of likeness licensing, things like that. Those fees, probably a decent chunk of change. They are, world renowned, but they are not the House of Mouse. So we could see some really interesting conversations surrounding the licensing fees for all of the Marvel characters, as Disney now owns all of Marvel, I believe. I believe they own Marvel Comics, which is, I assume, where you would go there unless you want your Marvel characters on the cards to look like the actors, at which point, the mouse probably owns their likeness rights too.
Yeah.
So the next couple of quarters, as this goes on, because I believe they said this is going to be 2 years worth of Marvel, can probably be some long, drawn-out conversations in that regard, and we'll probably see it brought up on the earnings calls a lot. Now, 2 years is a lot of time to continue doing this. The Avengers movies ran for a decade.
Oof.
They upcycled the same handful of characters, a number of B-tier characters, a handful of A's. We are still missing a lot in the Marvel Universe, and chances are I don't think WotC has any idea what's going on when it comes to the next X-Men series or the Fantastic Four, because we just finished casting them, right?
Yeah.
So we're not going to get any of those characters. We're not going to get a lot more fan favorites that look like the actors and actresses because they have not either been cast or their movies don't exist. So at this point, we're probably going to be relying on comic book characters alone, which means we're going to get a lot of slop.
I can't wait to see Blob.
I mean, nothing moves the Blob, to be fair. I'm a Silver Surfer stan. I know he doesn't do a whole lot besides Herald Galactus, but I'm here for a liquid metal body like that.
Yeah.
Right. So for me, that was also a lot of interesting verbiage surrounding the licensing fees for this, so I'm very curious and something I'll be paying attention to in the next couple of quarters. You did mention the Baldur's Gate licensing, effectively licensing D&D. We mentioned the OGL kerfluffle. We've mentioned it a lot. And one of the things we've also mentioned is how difficult it's going to be to try and recycle the D&D license when you basically just axed all of your ties to the studio. Who was it that did it? Not Lorian.
Yeah, it was Larian.
Larian, right? Yeah.
Yeah.
With Larian. You just let them all go. Like, sorry, guys, we're pulling it back. And I hope you enjoyed this really short ride. So long and good night. Right? It's going to be hard to curry favor and do this again. And granted, it's been a very long time since we got a Baldur's Gate game, right?
Yeah.
BG2 was it like a decade ago?
Over a decade. It was 2000. I was still in high school when it came out. So between 2000 and 2004.
Yeah. It's almost 2 decades ago was the last time we got a Baldur's Gate, right? So
yeah,
sure, maybe in 2 decades we'll be there. We'll have a favorable outlook from WotC working with game studios for this. But that is also something else that we're going to lose. Much like there was the conversation from 2022 going into 2023 where we didn't have the My Little Pony movies in Q4, and they cited that as a loss. Without BG3 next year, what are they gonna point to? Oh, we didn't have not quite a AAA title, or we didn't have a big video game release this year, so obviously profits and revenues are going to be down.
It'll be interesting to see because they've got to release an absolute heater, and I get it. MH3 is coming. We are getting a Q3, Q4 MH3, so maybe they're hoping that carries it.
Maybe. I mean, look, right now it's just a big ball of mom's spaghetti, and it's not like we aren't here for it. We're just seeing a lot of Eldrazi come out, so this is the Eldrazi set. It's the colorless set. Emrakul isn't free, literally. Yeah. So, we're moving in the right direction so far from spoilers. There are some other odds and ends that I have, but it's all kind of pretty heady and pretty like petty points. For instance, and this is one I didn't tell you about. If you read through the notes, you can actually see one of the most profitable regions, but still saw a loss, was LATAM.
Yeah,
Latin America. They were down 1%. Compared to other regions, which were down like 10 to 20% in terms of revenue. And they just cut language support for Portuguese.
Yep.
Right? So goodbye, Brazil. I mean, that's not part of LATAM, I don't think, but I don't know how WotC regionality works. They didn't have South America listed there, so maybe they're in LATAM.
Maybe it is, yeah.
Like, that's a cute little tidbit from this.
Yeah, it's interesting to see that I feel like over the years, they've actually gotten a bit not more transparent with the data, but they're disclosing more than they were before. Yeah. There's points and things that they bring up, facets of the business that are mentioned in these calls that, looking back at the previous notes, were just not there before. Mm-hmm. They didn't exist at all. And I don't know if that is because of the Alta Fox conversation, because if it is, then that's great. Because if nothing else, they accomplished a little bit more transparency, which was stuff that we said in the episode about Alta Fox. Just give us some transparency. They made the point that you obfuscate all this data from the shareholders, and we don't know what's actually going on.
Yep.
So I will give Hasbro props for, at the very least, disclosing more, if not being more transparent with the numbers.
Yeah, well, we still don't have a lot of great ideas around what kind of numbers WotC is actually doing when it comes to Magic. What does new player acquisition look like? What is the true split in terms of digital between Moto and Arena? What is your average sales per person when it comes to paper look like, etc.? Like, how are boxes moving?
Yeah.
We know draft and set boosters did not work out well enough that they created play boosters, but what has, in the last 2 quarters, what do your sales of collector boosters look like with all these dumb serialized cards? And I don't mean serialized cards are dumb. I mean, they pick bad cards. I will forever point to Bonesaw.
Look, the 420 Bonesaw was a gem of my collection for a while.
Look, obviously, yes, there's still things to have fun with in that regard, but if you want to point to, why did you do this? You have, that.
You're picking bad cards.
Yes. Yeah. We have, that.
Chromatic Star was fine. Bonesaw was pointless. Ichor Wellspring was fine. There were plenty of pointless ones, though.
Yeah.
What was one of the rare artifacts? The equipment. I can't remember. Anyways, there were plenty of pointless ones, and not just in that set, in all of them. I understand serializing all the doctors. That makes sense. They're titular characters. You've got to have them there. But why do we have to have 20 to 30 cards serialized in every set when you could get away with, and this is something that we talked about, and you were the one that mentioned it actually, was just serialize the Titans. Nothing else.
Oh, yeah.
Just the Titans. Just the 3 Eldrazi Titans. Nothing else.
Yeah, we were talking about this behind the scenes. This is just I slipped into your DMs. We were talking about this in Discord. And we talked about them. We're wildly tangenting now, but this will probably be relevant later when we come back to MH3 and we see like 400 cards are serialized. We are specifically talking about the Fallout cards being serialized and how it's like some of them are just look like dog. They're just bad cards to begin with. And there's an amount of, we are in the junk wax era now because when you look at the serialized cards, you have just so many bad cards that are moving product effectively because people are chasing them that everything is worth nothing. So if you want to try and pull back, you can't just buy boxes back like Topps did to reclaim products from the streets and effectively hold it or burn it. You can pull out of this tailspin if you get creative with it. And we know we're getting Emrakul, Ulamog, and Kozilek. We know they're going to be in Modern Horizons 3. They're on, I believe, the Jund lands. If you look at the art in this set, I believe it's the Jund land.
Yeah, I think
the
so.
Jund lands, you can see pretty clearly. And then If That Betrays might be on one of the other ones. So if you want to serialize cards, you can still have 1,500 serialized cards, 1 through 500 of the 3 Eldrazi Titans in the set. If you do them at a 0.001 insertion rate, that means it'll take 1.5 million packs to open them. All right, that is the rate. That means you'll be making 1.5 million packs. That is not a lot of packs of CBs for this set, so you can either stranglehold the market in terms of rarity and watch the prices on these things skyrocket, which is probably not the right move, or bring in a couple more, like If That Betrays, and maybe, I don't know what else is going to be in the set, right? Like another 2 or 3 cards so that you go from 1.5 mil to, like, let's say 4.5 or 6 mil. And then the prices on the CBs come. But you can be very strategic about it and not just put, like, the next Ambush Viper in serialized, right? We don't need that. We don't need a serialized Shock. We don't need a serialized Path to Exile kind of stuff, right? We can be surgical about this. You don't have to say, okay, well, we're going to put the allied fetches in this set, so let's serialize them too. Like, oh, well, the next one will have the enemy fetches because, and then when you do that, you just kind of like dull the effect. It just becomes noise over your audience. And like I said, wildly tangenting now, but you can be very, very surgical about this. And I'm hoping that with a change to this, MH3 can carry 2024 in such a way that it doesn't absolve WotC of the licensing fees, but it helps cover for those. It makes Universes Beyond a little more approachable. It makes WotC a little more profitable. So instead of seeing like 1% increase, we see a little more than that. We saw from the information here, WotC was up 10% overall in both regular and digital gaming. They did not really spread that one out. I would like to see those numbers. I would like to see the difference between paper and digital, especially because we just got 40K on Moto, so that's going to be Q1 2024, which could be huge for WotC. We don't know, but if they treat these sets properly, we can see these numbers change. We can see like some maybe difference in Hasbro, instead of again continuing to squeeze WotC for all they're worth, making them pay out the nose for these licensing fees to license very impactful and like brands and icons people are passionate about. Instead, do something a little less, I'm going to use the word gamey here, and I don't mean to play a game. I mean like chewy and like difficult to deal with.
Bad steak.
Yeah. You're like, oh, why are you moving to Marvel? Because it is like one of the most popular IPs on the planet right now. You know?
Yep.
If you're not going to market to the people that engage with those products from the other side, then why not try and be a little less on the nose?
Yeah.
You know, maybe we'll see that. And like I said, wildly tangenting and a bit babbly here, but I think this Q4, for me, looking at this Q4 report, reading through it all, pulling out a couple definitions, which I will put links to in the show notes for sure, because again, it is helpful to do this. Learning what goodwill is in regards to a purchase, you can kind of see why in this report Hasbro was happy with what's going on. A good example of this was kind of up top. They talk about diluted shares and non-diluted shares, and this is the last thing I want to talk about here. A diluted share is the way things look now. A non-diluted share is the way things look in the future. Let me just verify. It's one or the other. It's calculated. So they in the short term, things were down. Shares were down $10. The future says they would be down $2 from market value at that moment if things continued this way. But once they're done, once E1 is off the books, which we know was like basically the $1 billion loss here, we reclaim that. We can suffer a loss in the consumer products division, which is basically just tabletop, which is kind of obnoxious to see that is the failing part of the business, which is everything that isn't WotC at this point. Hasbro returns to being a profitable organization, so I understand now why Hasbro was happy to deliver this Q4 earnings report, because they got to say, hey, look at all the loss, how it's attached to E1 and its goodwill. Things are turning downward for the consumer product segment, but WotC is pushing us forward, and we are going to continue to hang our hat on Peppa Pig.
Yeah, it's look, I'm a big proponent of saying Pokemon is great because kids don't care about the economy. The difference is that your Peppa Pig audience can barely walk.
You're not wrong.
Whereas your Pokemon audience is going to middle and high school.
Yeah.
So, come on, guys, please don't hang your hat on that. Go for something more permanent, please.
After reading the Q4 report, did you get a sense as to why Hasbro seemed excited for this one compared to years or even quarters prior?
No.
Okay.
I think that it could just be literally we've grown in Q4 every year for so long, maybe we'll continue that growth outside of the pandemic, obviously those notwithstanding, because that wasn't real. And they thought, we'll continue to grow, ignoring the overall economy in the process. That's the only thing I can come up with.
That's fair. And so this has basically just been the rundown, some of the interesting points. There are some other odds and ends that we've got here. It takes a little while to kind of figure out the charts and how WotC's 10% increase could actually offset the loss of consumer products, 19%, and entertainment segments 31%. We'll put that kind of stuff in the show notes overall, but that is just like, I don't want to say food for the nerds, but that's basically just if you want to dive into the stats and actually see and take a look at the percentages, the numbers, and then instead of just believing the text, you can do that math for yourself. The tables all support it, and it's all the minutia of what's going on. But at the end of the day, I think this kind of quarterly report right here is going to be hopefully an inflection point, because we are, and I say we as if I'm part of Hasbro, God forbid, the inventory levels that we've been attempting to reduce are continuing to be reduced, because we literally just can't eject it into space and zero it out. This takes some time. We are out of the E1 contract. We've moved it to Lionsgate. The ink is dry on that, so we get to start 2024 fresh. We are without that burden, and we now get to actually start looking at the organization and seeing how our profits and revenues look with what we believe are highly profitable brands, unless you're a board game.
Yeah, that isn't Monopoly from Scopely. A licensed Monopoly, sorry. Yeah, it'll be interesting. But next week we'll have our individual thoughts on these points and what we think it means overall, rather than just listing them off.
Yep. So for MTG Cabalcast on Facebook, Patreon, Twitter, and YouTube, I am at Halt I am Reptar. You are
At Damon_Thurston.
And we'll see you next week.